And basically, what we're going to go through tonight is how to get started and why you need to get started on your bookkeeping and accounting for your business. I'll give you some tips around that and what it's all about and why it will make your life a lot easier if as you do it. We are also going to look at cash forecast because that's key in your business and how you can implement it in your business today and take some of the headache and the hassle out of the business and the unknown out of the business, and that really helps with sanity going forward. And then I always end up my webinars with my 3 top tips that you can implement today in your business. So I'm going to talk for about 20 minutes, I'd say 15-20 minutes, and then I'll take questions at the end and try and hopefully answer any questions that you might have. So this webinar is for you. It is aimed at people in business. It's for entrepreneurs and small business owners. And through your business, the life of any business, you will go through growth phases and you will go through plateaus. Often our revenue rises, and when we're particularly when we're going through a growth phase, our revenue will rise, but our profits won't rise at the same pace. And this is a problem because when you actually start and look at your numbers and look at your figures, you cannot sustain them. You cannot sustain that percentage. And often it's because things happen very fast. So we have to make decisions, we have to move when our customers and our clients want us to do things. We have to do them to keep them happy and to keep them as a client and a customer. But often, it's not shortcuts in the way that you're not providing a good service, but you tend to throw money at a situation if you need it to be done faster, and that tends to be why the cash is a problem, and the revenue grows, so your income comes in, but your profit is not growing. So you need to understand how it works in your business and how you need to control it, because it is better to turn down work and grow at a sustainable pace that you're always in control of the funds. You hear about these 6-figure businesses and they're always talking about revenue. They are never talking about profit. And you will wonder why, because a 6-figure business should have a very good a very high profit, but a lot of them don't. So, and this is also for you, if you're overwhelmed and you feel that you've got so much going on, you can't deliver it, and then at the end of the day, then you're still struggling to pay your taxes, you're still struggling to make a profit at the end of the year, then you really do need to start looking at the numbers in your business. So we're going to go through what bookkeeping, and one of the problems a lot of people have with accounting, apart from the fact that they find it a little bit difficult to start with, and they find it a little bit boring, and they find it all a little bit dull, is confusing. And the reason they find part of the reason is that we have different words for different things. Bookkeeping is one thing, accounting is another thing, and what are they and what are the difference? So I'm just going to go quickly through that. I'm a management accountant, so I'm a qualified management accountant. So I always love looking at the numbers, and it's not so much what the bookkeeping side, but it's what you can do with those numbers once you work them out. That's what I like to look at. And we're also going to go through the simple cash flow that you can implement today in your business, and just go through some very practical examples of how you can use that in your business today. That gives you information that you can use to make decisions. And again, we'll finish off with my top 3. So bookkeeping, so this is just a little visual here. We have bookkeeping here on the top, and this is the foundation. It's the foundation of all systems. So this is, I'll go through the slide now in a moment, but it is collecting all the information. It's collecting the invoice information, it's collecting the purchases information, and it's checking your bank and doing a bank reconciliation. If you're registered for VAT, it's about doing the VAT return. It's getting those books in order, keeping the record and how you keep. And from that, so you have to have a very good foundation in order to spring into the other two areas, which is management accounting and financial accounting. So now bookkeeping, as I say, is the collection of information on the money coming in, which is your sales. And a lot of us now have automated invoices go out to our customer. And so we're not too bad at getting the invoices out, but they're not great at paying, and we're not great at chasing people up. And if, again, you're in that growth phase and you're sending out invoices, do you know if you're getting paid? Do you know if everything has come back in that needs to come back in? And this is where it's very, very important that your bookkeeping is set up right. Now, I love Excel. Not everyone does. Most accountants do like Excel, I have to say, because they can do so much from it. I don't really care though if you do it on the back of an envelope. If it makes sense to you, as long as you do it somewhere. There are a lot of systems out there, technical systems like Xero, QuickBooks, all of those things. The only word of caution I would give there is, do get help with that. And if it's not me, it can be somebody else. Do get somebody that knows what they're doing and knows what it looks like, what your accounts should look like at the end if you're going down that cloud-based approach. I think everyone should be in the cloud, and I think ultimately that's where you need to get to. But it may be that you need to create a manual system first to understand how it works in your business before you can bring it to the cloud. Any implementation of any sort of online technical system, you would never just buy software and run with it. You would make sure you knew how it looked before you implemented it. Now, and again, collecting the information, the money going out, expenses, and we have a little bit of control over that insofar as we could look at our cash flow and try and understand, make sure that what we have coming in is meeting what we have going out. Checking your bank and completing a bank reconciliation. A bank reconciliation is really just going through line by line and making sure that you've accounted for every single thing that has come through in your bank account. And every single thing that you think should be there is there. Has everybody paid you? Payments that you think you've made, have they gone out of the bank account? Your bank account will be the kind of the catch-all situation. That's what you need it to be. And the catch-all, because if you haven't paid a supplier, the purchase didn't happen. If your customer hasn't paid you, to a greater or lesser degree, it hasn't happened. Now, financial accounting is the accounting that people know mostly, because it is about creating the profit and loss account and balance sheet. And it's also about keeping in line with regulation. So it's about getting your tax right at the end of the year. And that's the side most people are familiar with. So you would do a profit and loss account and work out what your profit for the year was. The balance sheet for sole traders isn't as important because the assets are not the assets of the company; they're the assets of the individual. And as a sole trader, everything has to be expensed and receipted. So the balance sheet isn't as important. You do have balance sheets if you buy assets for your business, like computers, things like that. And if you do have a stock business, so if you're a business that's running product and you're buying raw materials, you will have stock there as well that needs to go to the balance sheet. But ultimately, financial accounting is about getting your tax sorted at the end of the year and making sure that you pay all of your tax due. But again, financial accounting tends to be externally focused, and by that, it's the they're the accountant that goes between the business, which is you, and the government, which is collecting the taxes, and they're kind of making sure that you're compliant. So you might hear that word a lot with accountants. Are you compliant? That means, are you paying the right taxes, and are you charging the right VAT? All of those things that the government wants you to do, are you doing that correctly? And that would all fall under the financial accounting, and it is really, really important. But again, it's externally focused. So once the revenue is happy, then really management accounting is about what you need to run your business internally. So it's about reviewing the money that's coming in, reviewing the money that's going out. So as where bookkeeping was looking at recording that information and making sure that you're picking up all that information that you need. Management accounting is about looking at and saying, well, how much did I spend on my mobile phone last year? Is 3,000, is that reasonable? Is it not? Should I be looking for a different package? Should I be looking at bringing down that expense somehow? If you travel with business, you might look at hotel costs and think, well, I only traveled 4 times, yet it cost me 4,000 euros. This is a little bit crazy. You need to look at where you're spending the money, and then you look at controlling it and controlling the cost. And again, it is about the bank and completing the bank reconciliation. Cash is king and your bank is king. So it comes into all aspects of your accounting. And then you tend to look at reports that mean something to you. So as the CEO of your business, as the person, the owner and founder of your business, what is it that you want to know? What is it that makes, do you want to know which customer is providing you with the most profit? Who's giving you the most business? How many hours are you working on that customer to get that business? Is the customer that's so quiet that you don't hear from them from one end of the year to the other, are they making you any money? Are they your secretly most profitable customer? And so on. What are the information that you want to know, so you know where your energy should go? And again, forecasting does fall under the management accounting side, because you're forward looking and you're planning and you're looking ahead, and it gives you a lot more power in your company and a lot more strength for good decision making. And again, then the strategic planning. So you should always be strategic planning in your business. Everything that you're doing ultimately looks at getting different ways done. So looking at you take your foundation again, which is the bookkeeping side, and you see how it's affecting your business. How, if you decide, or if a customer doesn't pay you, how is that affecting your business? Is that going to send your business into an overdraft? Is that a problem? What's keeping you up at night? What's working? So what is working in your business? We need to do more of that, and what is not working is we need to stop doing that. And the real power in the numbers is there's no emotion in the numbers. They're just based on facts. So therefore, our favorite customer who we're spending a lot of time on, and maybe they're not they're not as profitable as somebody else that's very quiet, and maybe you don't get on with them as well, or the numbers will tell you which one is the better one to have. Now, that doesn't mean you've got to act on and get rid of your nice favorite client. That's not what that is about. It's just about knowing and understanding. So you might then cut back time on that, or raise your prices. It gives you options. You're still in the driving seat. but at least you know what the facts are. And then the numbers, you work out your plan, and the numbers will tell you whether or not you're hitting it or not, or if you are or not hitting it. And then the idea as well with the planning, because you do it more on with management accounting, you do it on a monthly basis, because you're always looking at those. We have accounting Fridays, a finance Friday in my Facebook group. And you're always looking at those numbers and keeping your numbers up to date. Now, when it does come to the end of the year and you have your tax charge done, it's done in January. I'm finishing up with my couple of clients. Their numbers are in at the moment, and I'm getting their taxes done, as I am with my own. And by the end of January, that'll be done. So you 2019 is finished. You move into 2020 very fast. And then the strategic planning, the management accounting, it focuses on profit, and profit is how you get paid, particularly as a sole trader, but also as a even as a limited company, you still have to make money to pay yourself. So and like everything else, if you're not making money, you are the person who's going to be without the pay, unfortunately. So I'm going to actually just come out of the I still can't share, continue sharing. But come out of this thing, and I'm going to go in here to my cash flow. So yes, okay, so this is a template, cash flow cash forecast. And we're looking at the template here, and we have the company name. That will be your company name, and I've broken it up into 12 months, January to December. And I have income 1, 2, and 3. Now, I have recently, I saw somebody doing that as in clients. They only had 4 or 5 different clients, and they expanded this area here, and they had their different clients going across the way. And they could have the company name, so it could be Smith and Company, Smith and Company, and you might have that there, and then they're going to give you €1,000 every month for the work that you do, and you drag that across, and then you expect at the end of the year to have 12,000 in that. In that there in for them, and so on, and you can have 2 or 3. You can obviously also expand that if you had 5 or 6, and some people find that quite useful because they're able to track exactly what happens and what money is coming in. So here I've just called this is your sales, but I've also had, these are other names for them. So you have sales, revenue, turnover, income. Different people call it different things, but they're all the same thing. And it relates to the money your customer pays you. This is, if you're registered for VAT, it excludes VAT. You do not put VAT into your accounts because into your sales figures. In your cash flow down here, you might include it. If you can do one of 2 things. The VAT does not go into your accounts because it is a government money. It's not your money. However, in your cash flow, you may find it useful to put in it in as 1, 1, 2, 3 because you're dealing with cash. And it might be useful to say that, and then you'll have an outcome here of 1, 2, 3. So the net effect would be the same, but you're just keeping track of it, and that's fair enough. Whichever you find easier to do. So I jumped there now. So sales here up there. So whatever, and then you can also use a different product. So if you have different services. So if you are like for me as an accountant, I have bookkeeping and management accounting customers. That could be one revenue stream. I then also have migrations into the cloud. That's another revenue stream. And I also have where I train people. So that's a third revenue stream. So that's how I work out my cash flow. I just work it out by revenue streams. And then I can work out which one's making me the most money. So therefore I know which ones I need to focus on and where I need to grow the business. Then we have cost of sales. Now, cost of sales is an expense to the business, but it tends to be something that goes directly back to your customer. So if, for example, you were a wellness practitioner and you ran workshop days, you would then, so you might have room hire, you might have different things, costs that you would only incur when you're making a sale. So for example, when it's a wellness workshop, you would have in here, you would have, say here, your wellness workshops. And you were planning on doing a workshop in, say, April, and you knew there was going to be 10 people there and you were going to make €4,000. Don't ask me how I'm making 4,000. People paying €400 for a workshop. But anyway, could happen. And then here you might say, well, I actually have room hire here. I have some room hire. And you know, if you're doing a room hire or a workshop in April, then you're probably going to have to spend out $750 probably on room hire the month before. And that's how it works. So I'm going to go over here now to cash flow with numbers, and I'm going to see, I've filled out some of these. So I still have income 1, 2, and 3. So again, no two companies' cash forecast will look the same because they have to be meaningful to you as the business owner. And I have here, this customer here is giving us €3,000 a month. So at the end of the year, I'm hoping to get €36,000 from this product or customer. And there's costs linked to this income, and it's subscription to certain software that if I wasn't selling, it's a little bit different than down below here. I have like MailerLite or MailChimp. That's a subscription too, but you use it for all your customers and you use it for all your products. This is something that if I didn't have this customer here, I wouldn't incur this cost. So it's directly linked back to maybe it could be something, some software that they have or something like that that you only use for this customer, and it only makes sense to use that. And then you have here, it could be cost of sales all. So you might have a product, if you had a product, or you have something else that isn't directly related to one customer, but it is, if you didn't make any sales, a cost of material. So if, for example, you were making cups to all of your customers, or your customers got, you sold cups to all of these customers, but you had to buy raw materials, that would be direct cost of sales. And you might hear people talk about cost of sales, or you might hear them talk about direct costs. And then we come down here then to expenses. Sometimes they're overheads, sometimes they're fixed costs. So there tend to be costs that are, you can kind of predict a little bit. Costs of sales tend to go up and down with sales. So if you lost a customer here halfway through the year, quarter way, whatever way, have you lost that, maybe this here might go down as well. You wouldn't quite lose it, but it might go down maybe to $750, whereas your phone is not going to change at all. So that's kind of helps when you're working out if it's a direct cost or not. And And here we have like your mobile phone, MailerLite, Teachable, software, petrol, hotel, everything. If you're a sole trader, everything has to be receipted. So you cannot put in mileage, you cannot put in per diems. It has to be the actual cost. And there are rules about you have to be certain number of miles away from your home before you can charge for food and before you can charge for a hotel. And you would have to have a receipt then, an invoice for that. Your VA costs you 150 euros a month, and so on. And so here's when we look at going forward, that we know that our insurance is due in June, and it's going to be, it was 400 last year, so we think it's going to be about 400 last year. Then you might have a membership fee or something that's a one-off fee that you know is coming up in February, and you might just pop that in there. And you'll see, and so you add up all these. You might again have to add a few lines here. But try and group them as much as possible, because the smaller the sheets are, there's a balance between the amount of lines that you need. For your revenue income, they say anything more than 7, it's starting not to make sense. Now, I think 7's a lot. 3 or 4, I think, is max, because it's easier then to keep track. But if you had 6 or 7 customers and that's the way you want it to go, then I would do the 6 or 7 lines. But if you go to 15, 20 customers, it's starting to get very hard to work out that, unless you wanted to do it on a different page and then just feed it in one by one. It depends on your business and how you want to, what you want to manage. But what you measure, you're managing as well. So if it's important to you that you have a list of the revenue in by your customer, then that's what you need to measure. So there's all your different overheads going in. And I mean, there's ones that we'll all have, but there'll also be ones that are just specific to your business. So here we then put in the opening balance account. So because this is January 2020, it'll be your business bank account as at the 1st or 31st of December or 1st January. And you pop that in, and then that gets added to the total here, which was a profit here of 5,760. And I just go back over here and show you now where I got that from. January, we sold to these 3 incomes. So we had income there of 8,000. That was our budgeted income. And then we planned to spend out our 250, 1,750 there. So our gross profit, which is our cost of our sales minus our cost of sales, was 6,250. And then we planned here to spend 490 euros, which gives us a grand total here of, you would take the 6,500 minus the 490, and you get 5,760. So the plan was that you were going to make a profit of 5,760. So you would, that will be cash in, assuming that your customers are going to pay for your are paying now today for your business, and you would expect then to close your bank account at 7,260, and then you come and your closing balance here is your opening balance, and so on. And what you need to then do is, so in February, you need to close out January. So you need to pop in here what is actual. So it will be actual figures then go in here. And I would highlight it different color. Yeah. So the actual. So that might be that the income from this guy was 3,000, but this guy never came on board. He was supposed to come on board, but he didn't. And then you actually had something coming out from, I don't know, XXYY. Uh, you owed money from December, and there was 7,000 there. All of a sudden, if, your profit of 6,000 or just under 6,000 has now gone to a loss of 1,740. So you need to kind of know what is the effect that has. So instead of ending the month with profit, you're ending it with a loss. And this here should be the actual bank balance as at the 31st of January. And you carry that forward, and then you're forever looking down the road to see, well, when do you come back into profit? You come back into profit in February. So then you look back at the figures and you'll say, well, is this guy coming here in February? Or he said he wasn't starting until March or until April. So you need to adjust that. Do you need to go and get another customer here? And this is the type of information that you're using to run your business and make those decisions. And you need to know those now. If you need to have a customer up and running by April, you need to be looking and setting that up now so that they're running in at April and earning the money. Obviously, depending on the different type of business you have. But knowing about it gives you the power to do something about it. And that's why I'm very passionate about the cash flow and looking at it and giving yourself the power to understand how your business is working, and so that is it in a nutshell. So with the cash flow, it can help you if you've stopped a service or dropped a client. What would be the effect? So if you wanted to change a client, or stop working with a client for whatever reason, or introduce a new client, or whatever the reason, what would be the effect on your business? Do you need more clients? Do you need more sales? If your computer, if you need to replace your laptop in the summer, how are you going to do that? When is the best time to do that? Can you put a plan in place now so that you can have it when you need it, rather than having to firefight and buy expensive or whatever, So this is the type of thing you need to be doing with the plans. So what do you need to change, or what do you need to do to meet the plans that you have set out? I'm sure you've all sat down earlier on this month or the end of last month and looked at the plans that you wanted to achieve in 2020. So how are you in monetary terms? How are you going to meet those goals? It may be that the goals you've set yourself, when you actually put money against them, it's like, oh, I can't have 50 more new clients, in the next 2 months, because you just don't have the bandwidth to take them on. You don't have the scope to be able to service those customers. Therefore, that gives you an idea of when will you be ready for those 50 new clients. Maybe 10 is more realistic, and the numbers only gives you control of your business. And helps you develop your business. So now we'll just go through quickly the top 3 tips, and then I'll open the floor up for questions. So collecting the information, it's the foundation, it's the bookkeeping, it's everything comes from this foundation, the bookkeeping side. Get organized, use a CRM, whatever it is that you need to keep track of those sales. If you're a volume-based business, so therefore you're sending out a lot of invoices, you need to keep track. Have those customers paid you? Have they paid all the invoices and the correct amount? Keep and list your expenses. So again, do it at the back of an envelope, whatever works for your business. I do talk about, you can see that now, I know it's a plastic thing that you could have in your car, in your office, and just you have it there and you pop your receipts when you need them. Luckily, luckily, a lot of our receipts are now coming from emails, so we can, we're online subscription, so all of that's there, and we can go back and get the information that we need. For a smaller business, you need to spend about an hour a week, just setting up your practice and just getting things up to date. If today is the first day that you're looking at it, so tomorrow morning, start from tomorrow morning, get the filing, your sheet, your book out, your system out. If you go out and buy something, start from tomorrow, start that system up tomorrow. The backlog will always be there. And if you try and catch up with the backlog while not changing tomorrow, it just keeps moving on down the line. So put a hard line in tonight. So tomorrow when you get up, you're starting your new practice from then. And then you slowly work on the backlog and catch up. And this one, that line will still be there. Cash is king. Don't let anybody else tell you anything else. It is not about revenue. It is not about greater or lesser degrees. It's even about profit. It is about cash. It is about having cash in your business. Have a business bank account. Keep track of your money. Try and get it all. Having a business account at least captures everything in one spot. So at least it gives you some leeway on your systems. Again, the third thing is always forecasting. Know what's coming down the line, so you're not going to be in tears and wondering how you're going to pay for things. Planning ahead, review where you have been, what worked on that spreadsheet. You expected to have a cash balance of 7,000, turned out to be 2,000, overdrawn by 200. What happened? Where did it go wrong? You need to know, was that a one-off or is that happening all the time? So what we've gone through tonight, we've looked at bookkeeping and why it's so important. So hopefully that's gone through. Management accounting, which is my favorite. How to use a cash forecast as a tool in your business, helps you make those decisions. We've just gone through the top 3. So I would love for you to come and join me in my Facebook group. It's called Understanding Your Numbers. But I will give you a link when I stop sharing now. I will put a link in the comments, so you should be able to click in straight. But it's Facebook, Understanding Your Numbers. And that's a community I am building, where we share information on the numbers, and it's a safe place for people to ask questions. It also gives me a good idea of what people are struggling with. And if you could come, the Facebook group is one area, and then obviously my email list is another. It's a combination of both, because sometimes I send out the templates. I'll be sending out the template, the cash flow template, in the next couple of weeks. So if you want to be on that list, come and join me on carmelseary.com. Send me an email at hello, or you can book a free consultation if you'd like to just have a deeper dive into your business over the topics that we have discussed. If you're thinking of going from a manual system into a cloud-based system, that is something I'm working with a number of people on. So I do run courses. I will be running a course, 2 courses at the end of be the end of summer, realistic, going into that learning time, just how to do fall in love with finance, all of that. It depends. So depending on where you are, depending on where you are in the business, I'll have some masterminds as well, starting up as well. So I'm trying to. It's a learning culture, how you understand your business and how you can make your ultimately grow your business through profit. So again, carmelseary.com or hello at. I'm going to leave that there, and I am going to stop sharing for the moment. And I have one chat. Thank you very much.